Good afternoon, everyone. Welcome to Stock Market Today. My name is Ken Shreve, joined by news editor Ed Carson. And on today's show, well, talk about what happened in the major stock indexes. Quite a laggard performance for the Dow Jones Industrial Average, but a lot of beaten down tech stocks helped lift the Nasdaq to a strong gain, and S&P 500 and Russell turned in decent performances. Before we get into another day of mostly solid price action in the indexes, I'll throw it over to Ed, who's got three stocks to watch for today.
Yeah, it was a strong week for sure. Want to take a look at one name that did not do well, certainly today, Cigna, along with a lot of other medicals, but Flex and Mobileye are a couple of stocks in buy zones.
Okay, very good. Well, why don't we start by taking a look? I think the Nasdaq composite is the first chart we're going to look at. Looks like we got an official close 1.9% higher after a really strong up session Thursday, Ed.
Yeah, it was like really a turnaround because on Wednesday, things were not looking good. I mean, there was some news out there. There was Bitcoin, there was some China COVID issues. There were some earnings. The mega caps were looking terrible, cloud looking terrible. But then the inflation report came, and it was powerful volume. It was a subsequent follow-through day on all the major indexes. Nasdaq above the 50-day line. We'll look at the other indexes. Kept on powering, and today got above all these levels, the October highs. So getting decisively above the 50-day line, and ultimately having the best week since March. It was up, I believe, 8.1%. So really, really came on. You can see what a huge gain that was. And when the market rally is now back into confirmed uptrend as the Nasdaq and other indexes showed real strength.
You can see a huge weekly gain there. What was the weekly gain we're showing? Might be a little bit delayed, but that looks like an enormous weekly gain for the Nasdaq Composite. All right, and then we'll take a look. I want to go over to the S&P 500, which also showed very bullish price action on Thursday. Lagged the Nasdaq today, but still ended up near its session high, bumping up against the 4,000 level.
Yeah, and all of a sudden, on Wednesday, again, this had fallen through the 50-day line, fallen through the 21-day line. It was like, oh boy, what's going on here? But Thursday it just changed everything, getting the 50-day line and all this October level, getting above a lot of this trading area, a lot of highs, lows in this area. All of a sudden, it's moving towards the 200-day moving average. You can just see how a couple of days can make a market look a lot better or worse, and definitely was for the better this time.
And it's a good example, when you get a sharp correction in the S&P 500, and it was a big pullback off the high for the S&P. You can say, I think it was back in August where the index bumped up against its 200-day moving average. So even though we're in a nice uptrend here, we still have to watch that round number of 4,000. And of course, that 200-day moving average is not far away either.
Yeah, that's absolutely. You just always have to be watching out for it. Just that's going to be a key resistance area, and the fact that it hit it and the market sold off so powerfully there. I do think there's a good backdrop with the Fed and everything, but we'll have to see that. Even if we do trend higher, it doesn't mean that we can't hit resistance, can't have struggles along the way, and so that's why investors can't get too excited, too aggressive, even though the markets had these big gains.
Why don't we take a look at the Dow too, which was a notable laggard today. Last check, I saw it up maybe 0.1%, so edged just a little bit higher. Obviously, this has been a leading index with the index comfortably above its 200-day moving average, but saw a lot of selling in the healthcare sector today, Ed, and that is apparently a big reason what weighed on the Dow today.
Yeah, and we saw a lot of other defensive growth names. Obviously, we're going to take a look at Cigna in a little bit, which is not there, but United Health is, and some other names. We're shifting towards growth. It's not the worst thing if the market decides to say the S&P and the Nasdaq and the Russell are going to take the reins from the Dow. That's more what we're used to seeing, so that wouldn't be the worst. So ultimately, moving higher, and it was a solid week, and this has been the leader. This one, if the other major indexes had looked like this, we'd be ecstatic for how well it's moved over the last several weeks.
Yeah, small caps have also been performing well. The Russell 2000 performed mostly in line with the S&P 500 today, but here's a look at the Russell, which tried to pop above the 200-day moving average. This is the IWM Russell 2000 ETF. Tried to pop above that 200-day line, but kind of got knocked near session lows by the close.
Yeah, so there is that issue, but still strong performance here. Got above the October highs as well. Just again, with a lot of other places, not just the Russell, but you're seeing just a lot more of these blue blue bars like strong volume gains. And so that's a positive sign that institutions are coming in and supporting it.
Yeah. So we know the bond market was closed today. Did we want to take a look at that 10-year Treasury yield? There was a big sell-off in bond yields yesterday, and the bond market was closed for Veterans Day. Happy Veterans Day, everybody. But we can see that 10-year yield right down at the 10-week moving average here.
Yeah, look, I mean, if you want to like this and the dollar, a couple of huge reasons. Why did the market rally so much? Because the inflation report was cooler than expected, suggests the Fed will slow down rate hikes. And if this continues, if we're finally seeing a trend towards slower inflation, maybe the Fed will ultimately stop at a lower rate than we thought maybe just a week ago. So this was really huge because we've been in this range and came down very hard. Now, will we continue to fall, or will we stabilize here, or will we rebound higher? If we rebound higher for whatever reason, then the market rally could easily come under pressure again. But this was really a tailwind after being a huge headwind for a long time.
As the 10-year Treasury yield has been heading higher, the U.S. dollar has also been heading higher. So when we look at UUP, here's a weekly chart, and I'll tell you what, Ed, if this was an individual stock, it's like head for the exits.
Yeah, and this is just what a massive loss. I'm not sure this has to be the biggest decline in a long time. So it's you just don't see moves like this. Obviously, a lot was going on. Just the radical shift in the yields changed this. And why does this help? Because it makes our exports cheaper, and all those multinationals that have all those foreign operations, they bring back their euros and their yen and their won back over to the U.S. If the dollar's weaker, then it translates into higher dollars and higher profits. So this is why
higher profits, particularly for blue chip companies in the Dow, for example, and
the Dow and the S&P, those big because a lot of these companies have been warning on currencies. Now they're not going to say, "Hey, we beat earnings on currencies," but that may be a reason why they end up beating views in Q4 because the currency comes down. So that's why it's been good news for the stock market to see that, especially the big cap indexes.
Well, we've seen a lot of stocks moving off lows. We know this big fall in interest rates was very good news for the home builders yesterday. So the ITB is another noteworthy ETF to be watching in this market. Obviously, the housing market is still struggling, but hey, maybe the price action in ITB, maybe 6-9 months down the line, seeing maybe some improvement in the housing market.
Yeah, and there was a lot of industry seeing that. There was like building materials, housing retailers. There's a lot of things in there that's looking good. Some of the housing retailers will be coming out reporting next week, like Home Depot. But yeah, there's a lot of broad-based strength. Again, definitely dependent on the yields not rebounding. If they surge higher again, chances are these will come under pressure. But there were some good earnings reports. So nice to see some laggard groups like this coming back up.
Even Home Depot ahead of earnings next week. I think it has a very similar looking chart to the ITB here. Just there it is, just that gap above the 200-day on Thursday's bullish session, and more volume in the stock today, and pretty decent close. So, all right, well, let's see. The last sector we wanted to look at, SMH, because we see these explosive gains in the Nasdaq over the past 2 sessions, and a big reason behind that strength has been a huge move here in the SMH.
Yeah, really big move. This is still a long way to go, but had a huge gain, and it already been sort of bouncing. Whereas some of the other names like the mega caps and the cloud software, these things were hitting lows as recently as Wednesday. So chips are further back along. That's such a positive for the market rally because chips are basically in everything. So if chips are rallying, that really says a whole slew of sectors might be doing better. I will note that NVIDIA, big deal next week is that NVIDIA has earnings next week. It's been rallying for several straight weeks. So it still has a lot of repair work, but NVIDIA and Applied Materials to a lesser extent, those might really see can chips continue to rally and provide some help for the market.
chip equipment firms have been on fire too. I know AMAT has made an explosive move ahead of earnings next week. So, all right. Well, there's a look at some of the strength in the market. Look at that move for AMAT this week. They also have earnings next week. We're here from Cisco Systems, maybe not as relevant a stock, but still another tech bellwether. All right. Well, we've got three individual stocks to take a look at. Why don't we start with Cigna, because we saw a lot of selling in the healthcare space today. It was kind of a tricky market because you had a big percentage gain in the Nasdaq, but you look at the top 10 gainers in the Nasdaq, and it's DocuSign and Zoom Video and all of these stocks, that have pulled back 60% off their highs basically, and they're just kind of rallying powerfully off lows. But let's start in the healthcare space, and a lot of selling in Cigna today.
Yeah, that's part of what makes the market tricky, is because you have the winners are these loser stocks, and then the losers are these stocks that have been leading, and there's not many stocks that are in between that are actually doing. There's a few, but not too many. Yeah, this was really violent, and it wasn't alone. Other health insurers, other drug makers, drug distributors, defense contractors, there's all restaurants. This was a really big sell-off, highest volume in quite a while. Looks like the highest in well over a year. Plunge below any kind of buy point if you want to treat some kind of this as some sort of base in here through the 50-day line. It did recover, but I would say this is a pretty strong sell signal, certainly intraday, that really like sort of a game changer. I mean, having a sector rotation, maybe these names will not lead if going forward.
There was some huge volume in Cigna today. I think, since it's a Friday video, we tend to go a little bit longer. I think we should take a look at Lilly too, LLY, because that was some pretty intense selling in this name. And you can see it stopped at its 21-day moving average. But look at that big intraday spread, and also a lot of selling in Vertex. So between Lilly and Vertex, a couple of healthcare giants that weren't immune to the selling, although Vertex managed a pretty decent close here after touching the 50-day moving average. All right, well, there's a couple stocks that are acting well in the market, and why don't we move over to Flex. FLEX is the ticker symbol here, and I believe this is a contract manufacturer.
Yeah, and this is one of the top groups. This is actually the subject of our industry snapshot this week, number 5 out of 197. One thing I like about this particular company, beyond the fact that it's in a buy zone, didn't have the greatest move on Friday, but strong week. 3 quarters of accelerating growth. Not only is it clearing, not as in above in a buy zone above this consolidation, but if you look at a weekly, it's really clearing a consolidation going all the way back to early 2021. The RS line is at highs. So there's strong growth here, strong group. Strong action here, and so this is one. It's not going to be it's exciting, but there's also a lot of other names in this group that are doing well. So definitely one to look at.
And sometimes the longer the base, the stronger the coil, as they say. So I mean, this could be getting ready to go on a nice run here, and it does have a confirmed uptrend working in its favor. You mentioned broad-based strength in the group. You can see on these MarketSmith charts, the top 5 companies in the group there, Sanmina, Fabrinet, all have made really strong gains in this market as well. All right, well, we talked about the strength in semiconductor stocks, so let's take a look at Mobileye, a rare IPO. I mean, the IPO market has been dead in the water for many months, but Intel recently spun this company off, and it looks like a pretty successful IPO so far.
Yeah, I mean, this used to be a separate company, then it was bought by Intel, came out, so it's not like a brand new startup, but solid earnings here, certainly in the last quarter, solid revenue growth, so nice performance in that regard. Hey, short IPO base, normally we like bases longer, but sometimes with IPOs, we discover that this is how, the way to go, and it, blasting higher. The volume isn't tremendous, but you have to remember the first few days, there's huge volume with an IPO. So you have to take that into account. It's the highest volume in the last several days. So that's something to gauge. Obviously the relative strength line at a new high, blue dot. I always get a little nervous, Ken, with stocks that have run up straight up like this from the bottom. I know an IPO is a little different. I would have liked to have seen it pause, form like some kind of handle in here. Maybe it still will. But I totally see if people decide, hey, I'm going to buy this because this might take off. This might just go and you don't have another chance. And so,
Yeah. Well, I think sometimes with a stock like this, and you're looking at a daily chart and wondering if you're chasing it, you can switch over to the weekly chart, and it kind of calms you down quite a bit, because this is, it just well, this one's the scale might be a little bit, the scale's a little bit off on this one, but this is was just a nice, relatively tight IPO base, so still in a buy zone here, and you want to be looking at early stage moves like this with companies with top fundamentals. When the market could be ready to, move higher from here. So, all right. Well, I guess that's it for our individual stocks. In terms of the broad market, when you're looking at growth screens, Ed, like the IBD 50 and the MarketSmith Growth 250, I think a lot of growth investors would like to see more setups to choose from. We're still a little bit light in that area, but we are seeing leadership in a lot of other different areas of the market outside of some of our noteworthy growth screens.
yeah, and there are some growth names coming up. Like these were a couple, Flex and Mobileye, are solid growth. There's networking stocks, but there's also building materials, and we'll see. I mean, things like Vertex, some of these names that got hit today, they took a hit, but some of them aren't damaged as much like Cigna. So I think you should be casting a wide net. I don't, like building up those watch lists. We're not really sure what the leaders are going to be. I mean, it may be that growth stocks will come out in a few weeks, but that's also a reason I think that you don't need to be super aggressive. The market had huge gains, but you can take your time, build up that exposure gradually. And if the market works, if your positions work, you can keep on adding and seeing how that goes. Because if this rally has legs, you don't need to get from 0 to 150% invested overnight. You can do it over time, and you will do quite well.
Yeah, well, we've slowly been wading into the market with leaderboard, and no, IBD Live is an area where a lot of us talk about our invested percentage, and right now our leaderboard is maybe 50%, 45-50% invested, something like that. So, we're encouraged by the market action, and we'll look for continued opportunities to increase exposure, but it has to be the right stocks with the right fundamentals and the right setups, and I think it's an important lesson. You don't feel like you need to go all in just after 2 days of bullish gains in the market. Just like you said, just kind of scale in slowly and increase exposure slowly is probably the best course of action at this point.
Yeah, and I would also just add that don't get too concentrated. We saw these defensive names sell off. Earlier we saw all these cloud software names sell off. You don't want to be all into a sector having 5 names, like 5 chip stocks or 5 whatever. Make sure that there's some diversity of leadership. Don't just buy random stocks, but a diversity of leadership to protect you from what can still be some violent sector rotation. And so you can weather those kind of situations or take your lumps and move on. So hopefully there'll be a lot of opportunities, but if there will be time for that.
Okay, very good. Well, Ed, thanks very much for your insight. Have a great weekend, and thanks very much for joining us. We'll be back on Monday for another edition of IBD Live that takes place at 9:20 a.m. Eastern Time every morning. We come on just before the market open each day, and we go for hour and 15 minutes, hour and a half sometimes. So join us Monday. If you haven't yet, you can go to investors.com/IBD Live for more information. Again, happy Veterans Day, everybody, and have a great weekend. We'll see you back here on Monday.